Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Starting with our top-down approach, we see no change on the longer time frame as the week continues developing inside the previous week as an inside bar. On the daily chart, we have potential daily excess. That's an important thing to highlight. Putting a stop to the apparent rotation back down that we had earlier within the balancing range. And the reason I say potential is because I like to have confirmation of this excess uh, of the structure and continuation before I can call it excess. If excess is confirmed, it is very likely that the weak top of the range at 28.94 will get into play. However, when we zoom into the market profile, uh, we see that despite the higher value that we had yesterday, the structure left on the way up is not typical of a very strong market. And the reason I say this is that we had a 2 ticks gap remaining at the bottom, uh, suggesting short-term money involvement. We had a poor low at the bottom with no excess, making an incomplete auction there. Later in the session, the C period launched exactly from, well, 1 tick below halfback of the B period, also suggesting weaker hands trading there very mechanically. At the top, we have valid excess. Technically, it's 2 ticks, but 2 ticks is not very good, suggesting also short-term money driving the market. And also, an important observation is that despite several attempts during the session, we couldn't extend the highs beyond the morning high. So nonetheless, having all these questionable data points, the higher value should be acknowledged. We have higher value and we have a gap holding, although it's not very good. So our initial focus is, or immediate focus for tomorrow is being to see if there is continuation or lack of it. Extension beyond the C high from Tuesday. It confirms the daily excess that we mentioned earlier and increases the odds of testing the range high at 28.94. Acceptance below the afternoon pullback, which is at 28.6425, denotes change and brings into play Tuesday's low, signaling likely further balancing within this range that we have in the green box. Remember, anything can happen because odds are just odds. We just try to make the most out of the clues that the market generates for us in the form of data. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.